Jean-Eudes Renier studied finance at Sciences Po and after an MBA at INSEAD joined Lazards investment bank in London. He later moved to Morgan Stanley and since 2008 has been a managing director at Bank of America and Merrill Lynch. Welcome to Alumni Experience, Jean-Eudes. Why did you decide to come to INSEAD?
I was already in banking. I was doing project finance, so not really investment banking, financing infrastructure, basically, in the UK. And so that aspect was for me absolutely critical. And then the second one was I felt I had done a lot of finance in my studies, and I knew Pierre Lyon from my Master of Science at Sciences Po. And he said, yeah, it's a good idea for you to go to INSEAD and, not do much finance, but you can do a lot more of, organizational behavior, strategy, etc., which is what I felt was missing. M&A is all about negotiating a price, a contract, and it's extremely tactical. And everything I learned here in the negotiation courses was completely and 100% used in my job thereafter, in terms of how you map your, the different issues that have high value to you, low value to the other side, and vice versa, and what you can trade and how you trade it, what exchange rate it has. When I brought this to my negotiations, my fellow bankers were like, wow, why did you find that?
People I know who went into investment banking after INSEAD, they were quite shocked by the workload. Did you have to go through that?
In the early years, it is a bit of it is hard. You have to work long hours, in particular because it's a client-based business, and the deadlines are imposed on you by regulators or by the momentum of a transaction. And as a result, the work has to be done sometimes in very, very short time, compressed timetables. So you do work hard. But then it actually reduces, the workload reduces as you grow up in the organization.
Apart from the workload, what are the kind of highs and lows of working in M&A?
The high is to do something or to advise a client on a transaction, which is a milestone in anyone's career. For instance, I did the first, I think it's still the last, successful hostile bid defense against a cash offer in Europe. But a properly done defense against a cash offer usually just results in an increased price, which is already not bad for shareholders, but normally not independence. And in the case of Lafarge against Blue Circle, we managed to basically get Blue Circle independent. Not for long, because a year later, Lafarge came back and actually the price was such that the board recommended the offer, but it was a high. The low is when you work on a transaction for a very long time and it doesn't happen. And that's very debilitating, demoralizing, because you can work very long hours and you feel it's going to work, and it's a terrible emotional roller coaster for everyone involved, the clients, the seller, the buyer, everybody. And it happens, sometimes it's part of the job, but sometimes it's still very difficult to swallow, even 20 years after.
I have this idea, I don't know how true it is, that investment banking is incredibly ruthless, and if you don't make the numbers, you're out. How do you deal with that kind of uncertainty?
After a certain number of years, you build the confidence that you're going to do that, because you've done it before, and you pretty much know what you have in the pipe. Right? So you know pretty much what revenues you're going to bring in the next 6 months. There's an element of visibility. Clean on the down cycle, you may get it wrong. On an up cycle, you may underestimate it. But roughly, you kind of know if you're realistic. So you have a view. I think it's actually not necessarily that different. I had many bad years. It's not because you have a bad year that you're going to get fired. You can be unlucky. Right, we're working only on transactions that don't happen. But if you're a good banker, they're going to keep you.
You've made a long career in banking. What kind of people are suited to banking in the long term for a long career?
Well, it's interesting because we ask as when we define what we want to recruit and how and where we go to, we ask ourselves that question. And every time I'm listening to HR and other people, and I'm saying, look, I personally do not believe there is one model that fits it all. And within my team, in Europe and in Asia, I have bankers who have completely different profiles. You have the super strong technical guy. You have the very weak technical guy, but amazing commercial ability to build relationships out of a handshake, right? Literally. And an ability to get those people to give him a call, to give him mandate, because they know he's going to bring the super good technical guy. However, there are some things, to answer your questions, which are relatively similar. There is a lot of resilience within all those people. There's a lot of level of energy. There are some people those are people who love the international exposure. They never take no as an answer, never. Because investment banking is so competitive, that's the other thing. It's only about, I think, the last little effort that you make, which that's going to make the difference. And they're all in that mindset in a way.
When you get to a senior level, how important are your relationships? How important is it, for instance, to be the guy with a fantastic relationship with the Vodafone CEO or something like that?
The relationship is institutionalized. It's not one guy. It's not true. The big banks are not that stupid to let one of their bankers hold completely Vodafone. They will never do that. That would be mad, because then the guy will hold them to ransom. Either you pay me a huge bonus or I go, and then they have no choice. So all those big relationships that bring a lot of money to investment banks, for all investment banks, they're completely institutionalized. What does it mean? Concretely, it means there is at least 1, 2, if not 3 very senior bankers who have a relationship with the CEO and cover them in partnership and are paid to have a good partnership, right? So they don't shoot at each other. And they're incentivized to be good partners. It's usually part of the culture anyway, at that level. There is usually a lending relationship. Usually the CEO at the top of both houses know each other, even sometimes socially. So you remove one piece of that, it survives. And therefore you cannot say it's my.
What's the key thing you have to do to prosper through your career? What's in a way the number one thing?
I think you have to demonstrate that you can still win the trust of CEOs. At the end of the day, you are selling your judgment. Well, because at the end of the day, the client pays you to say and trust your judgment, saying that is a very good deal for your shareholders. And another issues that CEOs kind of talk to you about in terms of yes, you should do that equity transaction. You have to do this now, and your rating will improve because and that's what happened after that. It's that kind of judgment on what the strategic actions that the CEO and the board wants to take, and they need to rely on someone who's doing this every day. It's not particularly a genius, but it's just because he does it every day, day in, day out. His judgment has been sharpened and sharpened and sharpened for 20 years. And he says, that guy has done his homework hard, and he knows it is a good deal, and you can trust what he says. And because that he will tell you if it's not a good deal.